Okay, we have some good quarter. That's a good dream team, like like the first
Exactly.
Q&A. Yeah, yeah. By the way, the class two is not 80 minutes long. It's more 1 hour long.
Oh, 1 hour long. Okay. Okay.
Yeah,
Cool,
it's
cool.
it's hi Hugo. Oh, we have a message from Scott. Good morning, guys. Good to see everyone. I'm having trouble with my audio. That isn't working. No worries. If you have
Okay.
any
That
questions,
happens.
yeah, that's Zoom. Yeah. The class two that will be released this weekend is about the complete analysis of income statement, balance sheet, cash flow statement. So in module one, we talked about cash, debt, but we go in details for the financial statements. And in class three, that's how all these data, financial data, can be manipulated to boost earnings to meet your guidance or all the stuff. What can impact free cash flow, working capital, capex, what is capex, etc. I think that's pretty cool.
Yeah.
And
Cool.
I think with module one and two, that's a very good base to invest. Hi, Hugo.
Yeah. Hello, Hugo.
Hi everyone. Can you hear me?
Yeah,
Yep.
yeah, I can hear you. Okay.
Okay, perfect. How are you?
Very good.
Good,
Very
good.
good. Very good.
Yeah.
Very good.
Yeah.
The On the last Q&A call, we talked with Hugo about the company, a Chinese company, was called Daco Energy, and it was really difficult. Like the kind of analysis that is not easy at all, that is producing, I don't know, silicon, something like this, Hugo. Maybe you can pitch the investment, see if maybe Eduardo knows it or Scott knows it.
I
Uh,
haven't heard of the company yet, though.
Mm.
yeah. So it's Daco. It's a Chinese company that produces. It's called polysilicon. It's the I think building blocks of photovoltaic panels. So solar energy in general, and they operate mainly in China, and they sell their polysilicon at a high, I would say, yeah, high quality polysilicon
Mm-hmm.
to all over China, and that's basically it. Really great business in general, very high margin normally because they have a great product and they can sell it normally at a high price. Lots of cash because they had great years 2 year or 1 year ago. The price of the polysilicon was like $33 a kilo, something like that. So it was great years for them because they had huge stocks and they could produce a lot of polysilicon, and their prices were and they could so they could provide the market with all of the what they needed, but the price crashed recently, so now the price is $7 or $8 a kilo, and so as a matter of fact they had a way worse year than previous years, but still they are able to make 25%, I think, margins, and still make some money, some cash.
Yeah,
Yeah. So
that's
that's
good.
basically it. The market is really fearful of this massive drop in price, massive drop in price. So it's the price has been divided by four. So almost everyone got out of the business
Yeah.
because they think that the price will still continue to fall, sorry, and they don't believe that the price can bounce back.
Yeah,
Mm-hmm.
and in the past they made a lot of money because they sell polysilicon and they sold more volume with a higher price. So a double tailwind, huge tailwind, producing a lot of cash flow. They have more cash in their balance sheet than the entire market cap. So enterprise value is negative. They have so much
Yeah,
cash. And now the price of the polysilicon, the raw material, has decreased from $30 to 7 or something like this. And people are anticipating that it will go lower, so less revenue, less cash flow, and the company is doomed to fail. And it's a Chinese company, so a lot of hate, and the stock has
A lot of
dropped
hate.
80%, something like this. That's some crazy numbers. Yeah. So yeah, I think nobody knows this business. It's so niche, but that's some good work. Have you done some work, more work on this, Hugo, or not?
No, basically, I left off where we were last time, so last Friday. I didn't do more work, but I published a new article on the group and about my change of, I would say, view of the Chinese market and in general markets that aren't favorable, are not willing to have investors win. So right now, it's still the best company, I would say, if I understand, on my watch list. So I will put tiny fraction of my cash of my
Did you buy the stock?
of my portfolio. No, I didn't buy it yet. I wanted to buy it today, or I think it's the market is closed. Market is closed tomorrow.
It's a big holiday for Easter, so yeah.
Yeah, so I will buy it next week, maybe, if I don't have time, or today.
Yeah.
So I want to buy just a small portion of my portfolio, maybe like less than maybe 1%, 2%.
Yeah.
And,
very tiny percentage. That's some good portfolio allocation.
Yeah, it's not really what I plan normally to do, but I think I will reduce my position of Baba. So I will cut half of my position of Baba and put the money in the Dako company.
Okay.
I want to have as little as possible money in the Chinese market, but still I want to I want to see where it goes, and I think I love the business in general. I hate China, but I love the business.
Yeah, that's the same question. I think Eduardo shares the same opinion of, if he could invest only in US company in Google, he would do it. It's just that the price is way different.
Yeah, I mean, I think the situation in China is about to change. I think, you know, I'm not sure if you guys listened, not sure if you guys saw this, but President Xi, had a meeting with top CEOs of major companies, major US conglomerates. So I think that's a positive sign, that it conveys confidence among investors. But I think sooner or later it's going to be inevitable, and that's why I'm concentrated in a company like Baba. The main reason is because I don't see anything that I really like that is cheap enough for me to buy. So I have about like 17 or 20 companies already, on my watch list. But oh man, they are still so expensive, mostly because they are US based. And it's just so, I'm still with Baba in cash, frankly. And I'm planning on adding to my position. I'm waiting for the next the quarterly earnings meeting, and see what management says, and if there is any improvement to the financials, and if so, I will certainly add to my position again.
Yeah. There was some news this week that they canceled an IPO of one of their branch. So management is working really hard, and I would not like to be the CEO of Alibaba right now. And like a couple of weeks ago, they say, we are back, baby. So
exactly.
what is back? We've been waiting for 2 years, so just wait and see. And additionally to Xi Jinping meeting US CEOs, they said that they want to implement more boost in monetary policies. That means injections of liquidity. So maybe they will do like the US, maybe slowly at the beginning, and then we will see. But definitely good signs. I'm just waiting for the good moment of we are back. I'm waiting for these earnings.
I think we are going to be rewarded, Chris and Hugo, because the sentiment is so negative in that market that what we need is just a trigger. It can be something. It can be like this meeting that he had. What we need is a trigger for the value of a company like Baba to just double overnight. That's it. I don't. So, for example, the reason I think my risk is limited is because the value is so depressed. I don't need the company to go back to 300. If the company goes to like 120, I double my money. That's it. So I think it's worth the waiting.
Yeah, and the price would not even be expensive at 120.
No. Exactly. That's how depressed the company is. It's a phenomenal business. It's everywhere. I mean, come on, Jesus. Yeah, it's unbelievable. So I don't think we will see a bargain like this that quickly again, really. And it's the only thing like really attractive. I see other great companies, but unfortunately, they are still very expensive.
Yeah.
So yeah.
We have the whole market going higher and higher and higher, and everybody is waiting for a pullback that is never
Pullback, yeah.
happening.
Oh, mate, I wish, man. I wish.
All
Yeah,
If I
the
could,
desperately.
if I could be
Yes.
more bearish a bit on what you said, I don't have that much history in, I would say, looking at the markets and how Chinese has recovered from those types of situations. But even if I would say they recover normally, there are other companies that I'm looking at right now that could be possible buys. So I don't know. You said that you had. I don't know how much cash you have on your total portfolio or total allocation. Uh, for me, it's like more than 80% right now because I haven't made many things. I'm focusing on improving and learning right now. But I think there are other opportunities, as we discussed last time with Christophe, outside of China. And I'm not convinced that Chinese will ever want to have high PE ratios, and the companies are really going to strive ever. So
They said the same thing. They said the same thing years ago. The Chinese. I mean, yeah, I understand because it's a communist country, and every now and then they go through these periods of boom and bust. Yeah, because the government does something. But I think if you look back like 20 years, I mean, look at how much China has improved economically. I mean, they lifted the entire population, well, not the entire, but certainly a great percentage of the population of poverty, and which is incredible. And I think, look, whether we like it or not, they are the second major economy in the world, soon to surpass that of the United States. They can't be disregarded. They just can't. They are too big, you know. They're not just like one country, like in a third world country.
yeah,
They are a
I,
major economic power.
I agree with what you said, but for me, it's not, I would say, the economic part problem. It's the investing part that is the problem. I don't think China will ever do buybacks or as much buybacks or any dividends, giving dividends to as US is doing. I don't think they will ever want. For example, the company that I'm looking at, Daco, for me, it's the best in all over China. For me, it's even better than Baba at the time as an opportunity, as for my considerations. So, and even that company, I'm not even sure that what they have in cash or all that, they will ever want their investors to benefit that. I don't have any idea. I don't have much, I would say, history of how Chinese acts for their investors, but I don't believe that they will ever do it.
Yeah.
So that's the thing. That's as we discussed with Christophe. Maybe there are some countries in which even if you are the top business, you are the top opportunity, you are not the top investing opportunity.
Yeah.
Because you are not going to make money as an investor. And that's I have a real problem right now with this idea in general, but I don't see any more fruitful consideration than thinking that China is a good economy. It will strive maybe as an economy, but as an investor, you will never strive in China.
There is a letter from Rob Vinal talking about China and how there is a difference between the Chinese economy and the Chinese stock market. And the way the ownership is done in China is through VIE, I think. It is in French or in English. Eduardo, can you confirm that's the good way of saying it?
Yeah.
Yep. And when you buy some Chinese stock, you are not an owner. You don't possess 0.001% of the company. You have a ticket that says, okay, if the price goes up, you win money, but that's it. What China has done is they have accepted international money to have real life infrastructures, real life jobs inside China. But for all the financial risk, it's for outside investors. So with the VIE structures, they get money from all over the world, international money, but for the jobs, for the infrastructures, the roads, the buildings, that's built in China. So you have a real distinction between economy and stock market, but that has been the case for years, and still you could have invested in let's say Tencent, for example, in 2000 and made a lot of money. You just have some exceptional businesses, and if you bought Alibaba during the IPO, you would have 7 years, 8 years of big profitability. So some great businesses are valued at a P of 20. It's just that at the moment, it's completely hated. But since, I don't know, Nick Sleep, I think, bought Tencent or something like this. Maybe it was Nick Sleep or another investor or somebody in Napsters, which is the South African company. And they bought Tencent when it was a small publishing company in 2002, something like this, really, really small Tencent at the time. And they bought it in 2002, and they compounded their money for 20% per year for 20 years until 2021, until the crash recently. But they definitely made a lot of money with China. So yes, there is a distinction between economy and financial part, but you can still make money.
You can, but you just have to be cautious, right? And with so much pessimism, I think that all that negativity is already priced in. That's what I mean. So I wouldn't buy Baba despite being a great company, for example, in other circumstances. But the price has collapsed so much and the company continues to actually grow. I mean, yeah, all I think we will need is just a trigger, and it doesn't have to be something phenomenal happening. I mean, just a trigger can easily double our money, and to me, in Baba, that would already be amazing. So, yeah, let's see. But I agree. But another thing I don't like, for example, you were talking about buybacks. Right now in the US, every company practically is doing buybacks. The problem is that most of them are overpriced already. So these guys are just doing buybacks at really high valuations. And to me, that's not a positive. At least in China, they are doing buybacks while the price is depressed, right? But if you look at these companies, these mega companies like Apple, they continue to do buybacks even at these prices. To me, that's a red flag. I don't like that.
Yeah, they just have their buyback plans, and every year we will do this amount of buyback, regardless of the price. Usually you want a management that do buyback when the price is cheap, not when the price is expensive. Domino's Pizza has been this prime example of buying shares when the stock was trading at a PE of 30.
Yeah.
That could be a bad sign. In the
Yeah,
US,
I know.
you have some opportunities like this when management buys at a cheap price. But right now, as you correctly said, the biggest companies, the most common companies, they all have buybacks at very high prices. So I
Crazy.
assume that
Yeah.
nobody on this call has bought some US stocks recently.
Yeah. No, I haven't. I'm like Hugo, so most of my portfolio is still in cash, and I keep waiting. I don't mind waiting. Of course, I'm not gonna buy a company, even it's a great company, just for the sake of it, because also as was mentioned here, a very good company, even if the company is great, that doesn't make it a good investment, right? So we have to be patient. We have to wait. That's what I'm doing.
By the way, speaking of big buybacks, I've recently studied the home construction industry, like all the home builders, but not the companies that build homes, just companies that build small tools to build homes. And these small companies, they are maybe 5 billion market cap. These are huge cannibals. For 10 years, they have not grown much. And then I don't know why, but since the pandemic, earnings have done 5x. So EPS, I don't know, 5x, a lot of cash, a lot of buybacks. And you have a lot of examples of companies that have seen their stock price triple or quadruple in 3 years, 4 years, and they bought back 30% of their shares.
Wow.
Who could have guessed? Who could have guessed?
Yeah, I know. You know, it's fascinating. It's all great when the market is going up, but the thing is, when the market do come down, when the market does come down, which it will eventually will. I mean, I just think I don't know. These companies will have to refrain from doing those things. Yeah, doing buybacks at ridiculously high prices. They're going to have to be more conscious about how they are deploying the cash flows and all of that. But yeah, I don't know. I'm just waiting for the markets to come down. And by the way, 2 or 3 of the companies that I really like and I have on my watch list, like Ulta Beauty, um, what's the other one? Lululemon.
Yep.
These companies reported earnings and they crashed like 10%, but they are still expensive because they were trading already at all-time highs. So
Yeah.
even with a 10% cash, you are still paying a ridiculously high multiple.
Yep. You have to wait. And when now you have a euphoric market, even if the stock price drops by 20%, it's still overvalued. You have seen the same for cybersecurity names with some lack of growth, I would say. An example is Fortinet. You had an expensive PE ratio at 50, for example. The stock price dropped by 20%, but the PE ratio is still 40. So still expensive. No deal in sight for this. That's, yeah. And you have plenty of other opportunities like this. I
Yeah.
think in your graph, in your table, Hugo, that you shared with the post, you've seen Argentina as the second country and other countries with the highest returns on the stock market. Do you have any conclusion to these findings, Hugo? Maybe some interesting countries that I don't know, that you've discovered?
Maybe not interesting countries overall. Countries to I would say to watch out. So China, I will for now. I don't have a much history about how Chinese stocks have evolved, but I try to be careful about that. But I would disagree with what Eduardo said earlier. I think there are some companies to buy right now, and I'm looking at I would say one or two which I think Christophe is really keen with. So we can talk about them. It is Evolution AB. So it's not in US because everything is too expensive in general in US. But there's one in so Norwegian company Evolution, And there's a company like Gravity that is doing great in Korea. I checked everything. For me, it's a possible buy right now. So I need to dig a bit more in the gaming, online gaming, and mobile gaming sectors, but they are still interesting. And there's maybe one or two other names that I'm looking at right now. I'm trying to investigate more. So I saw that there was a question from Scott. So I don't know if
Yeah,
maybe
Scott said,
Christophe, you want to.
interested insight on buybacks. I agree. It leaves investor with the buy test in their mouth. Yeah, when they are done at a high price, it's bad for shareholders. Scott asks, do you feel the same way about stock splits like Walmart and Chipotle recently did? Stock splits give investors opportunities many wouldn't get with like Chipotle at $3,000 per share. I would never buy. Yeah, that's a good point. And I would be cautious about stock split, and I don't like them at all. I would prefer to see the stock price grow and grow and grow. Stock splits are done to cut your cake in different slices. So, for example, Hugo, you ask about TPL, Texas Pacific Land. The stock was trading at $160 per share, something like this. And the management said, okay, we will do a split of 3 for 1. So we will cut the price by 3 and we will give 2 additional shares to every shareholder. So instead of having 1 share as a shareholder, you own 3 shares of the same stock. So it doesn't change anything for the current shareholders. It's just for incoming shareholders that don't have $1,600 to buy the stock. For smaller shareholders, that's a good opportunity to buy. But right now, with, I believe, US brokers or international brokers, you can buy fractional shares. So I don't see the point of the stock split. Before, you could not buy fractional shares. So if a stock is trading at $3,000, you need to disburse $3,000 to buy the stock. And as Scott rightfully said, if you can't buy fractional shares, you are forced to buy at 3K, and it's impossible if you don't have the money. So, but I believe on eToro you can buy fractional shares. So you can buy $100 worth of Chipotle. If it's worth $3,000, you don't mind at all. And you would see, I don't know which investor gave this advice of only looking at companies with 4-digit stock prices. I don't know, I don't have the name in mind. If you look at the companies in the stock market that are trading with the stock price above 1,000, so before Alphabet was like 2,000, or Berkshire Hathaway, it's $500,000. If you look at these companies with high stock prices, you get less speculation, fewer smaller player. You don't get the Robin Hood hype. You don't get
Exactly.
all the I don't know, all the retarded mentality guys that come and trade markets that just want to pump and dump the next crypto shit, all this kind of stuff. You are much more likely to get a long-term shareholder base, but because they are willing to pay $5,000 for a single stock. So not everybody can pay $5,000 for a single stock. You have wealthy guys that are not young, they have the money, they are here for the long term, they believe in the company. So if you remove all this younger generation that are willing to pay $20 and willing to bet in the stock market, to play the stock market for $40, if you remove all of them, all of this trash, I would say, you only keep the conservative long-term shareholders. So that's my opinion on stock split, and that's why I prefer companies to never do stock split. As a long-term shareholder, I like it when the stock price is high.
Yeah, Buffett commented on that. It's exactly as you mentioned, Chris. He essentially keeps the price of Berkshire shares Class A that high to avoid stock speculation, which makes a lot of sense, frankly. Yeah.
Yeah, it's just that now with a lot of websites, you can buy fractional shares. So
Yeah.
the smaller investors can go and buy 0.00001% of Berkshire Hathaway. So I don't think that the stock split will make a difference. The only difference, well, you can say there is no difference. As a current shareholder, you don't mind. The only difference there is maybe some legal cost. When a company, I don't know, Chipotle, when they do their stock split, I don't know where that was, you have to pay a lawyer to say, okay, cut my price in half, cut my price by 3 or by 4. And you have some minimal cost, but still cost that you would not
Yeah.
have if you didn't do the stock split. That's the only difference. I don't know if that answers the question from Scott, but I think that's helpful. Most of the... Thank you. Yeah, you're welcome, Scott. The stock split are never welcomed for me. Texas Pacific Land did a stock split, and I wish they didn't. It's just that governance is so bad. They've had issue with governance. For this business, they just have lands in Texas, and it's poorly managed, but it has been poorly managed for decades. So you have some legal action, governance issue, big salaries, it was a trust, change in corporate governance, that's a mess. And they only do bad decisions. So yeah, the stock split is a bad decision. And I wish the stock price was 3K, 4K, $5,000, so that you don't have much speculation. Okay, that's it for the stock split part. Before, Hugo, you talked about Evolution Gaming and Gravity. Okay, maybe Eduardo, you know Evolution Gaming. I wrote about it for the Stock Unlock newsletter, but it's not a US company, so maybe not everybody is familiar with the name. Evolution Gaming is a gaming company that has been growing by more than 50% per year for 6 years, 7 years. So huge growth. And you may say they have a lot of cost. Well, they don't. It's 50% growth in revenue, but also in operating margins, net earnings, free cash flow, everything that you want is beautiful. With high margins, they have a very high market share and operating in many countries. The only big risk, because it's a gaming, well, it's not really gaming. It's not League of Legends. It's just some poker playing.
It's a roulette. It's roulette in general, or
Yeah.
blackjack. It's online casinos.
Exactly. And the way it works is that because you can have one table of casino and thousands of players for this table, the scale economy is just wonderful for this business. So as they grow, they get better. As they get better, they grow. As they grow, they get better. And right now, they are trading at a P of 25, something like this. Quite
Lower
good.
than that. Yeah, I was just checking. Yeah, I heard about that company, but it's just not some gaming is not something that I really understand. That's the only reason why I don't have it. But I know that other great investors have it, yeah, in their portfolios. And if they are growing that fast at those rates, but they have like yeah, they are priced at a multiple of 20, which is actually, I was just checking here on Stock Unlock. Yeah, they are trading at a forward PE of 20.
Yeah,
So
pretty
that,
cheap.
yeah, that's quite impressive for a company growing this fast. Yeah, definitely.
Pretty cheap. In 2 years, it would have like a P of 12, 13, 14. It's crazy cheap. It's just that I don't know why. I don't know why the company has just fallen a bunch, and the PE ratio is correlated to I think licensed games, like regulated games. And
Okay.
if you don't see, because you have the regulated industry and non-regulated industry, because it's a casino thing, it's quite complex. If you have a year with a strong growth in regulation, like licensed games, I would say, then the P ratio deserves a premium. And recently, we have seen some slowdown in this category of licensed games, of official games. So the P ratio deserves a discount. But that's fluctuating. And you see over 10 years, it has been fluctuating. So
Fluctuating.
the
Yeah.
risk reward is quite good, in my opinion.
Yeah, it's because of the licenses and the regulation that comes into it. Yeah, I understand that. I mean, yeah, it's a great business historically, and it's essentially priced even lower than the S&P 500 PE. They have like a PE of 23, and on average, I think, what's the growth rate for the S&P 500 over the last 10 years? It's certainly not 40%,
Oh, no.
50%. Yeah. So yeah, this company would deserve a premium. Yeah.
Yeah.
I'm going to look into it in greater depth actually, because it's this cheap. And I look at the inside score, Christopher. It's 4.23.
Oh, yeah.
Jesus. Yeah.
4
So
out
yeah.
of 5, yeah. That's very good. And you don't see many negative stuff about the company. When you watch the interviews from management, you see they say things are going well, really good. We are coming fast into America. And in America, you have a lot of casino players. They are sports betting. There is a sports betting culture here, so we can find a lot of good customers in the US, and we are growing fast. So that's maybe too good to be true, but for the moment, I don't see a big red flag.
Yeah, okay. I'm gonna dig into it, definitely. Yeah.
Yeah.
And thanks for pointing that out, Hugo and Chris. Yeah, I'll definitely look into it.
Yeah, if I could add things to what Christophe said, I dig also a bit deeper in evolution, and so it's online casinos. That's the sector. They operate right now more in Asian countries, so that's the biggest part of the market. But they are in Asian countries. They are in Europe, also very strong. And how, as Christophe said, they are starting in America. So America is their new target, I would say. And they are growing so fast, and they are making what they need to make sure is that they have enough. I don't know the name of croupier in dealers. Yeah, it's dealers. You know, the guys that are because
Security cards.
it's live, so they also deal cards or press buttons live with players. So how they operate is that they pay beautiful woman or beautiful person cheap, really cheap. So in east of Europe or Colombia now. So they are building two new buildings, one in Colombia and one in Eastern Europe, to have facilities and to hire some dealers, some people that could, so they could increase the number of tables where the players can play. So great business. They don't have many costs because they have cheap labor. You don't need to have expensive labor. Nothing is expensive at all in the business, and it will always stay like that. So it means the dealers are cheap. The software or the internet required is cheap, and the facilities are quite cheap because they can have dealers where they want in the cheapest country, which they do frankly really well.
I already have them on my watch list. I'm going to dig into them over the weekend as well.
Good.
And we'll let you guys know if I found any red flags. But I mean, yeah, the inside score is just amazing. So yeah, I have to hop off. I have to hop off. Hope you guys have an amazing day.
Yeah, thanks for coming.
Always nice to catch up. Yeah. Have a good one, guys.
Have a good one. Have a nice weekend. Bye-bye.
Have a nice weekend, guys. Bye.
Scott has a question. Sounds good. I don't know if right now is the best time to jump into this evolution AB because it has made a V-shaped pattern back to previous one-year high from approximately July 2023. Yes, I'm afraid. Oh, Scott is adding October 2023 would have been a great time to buy shares, but everything was a good buy during October's low. I completely agree that you had plenty of opportunities when I think between the summer of 2023 and October 2023, everything dropped 10-15%. So you had plenty of good opportunities. 1 year is nothing. 1 year is nothing if you're afraid of the shape of the stock for 6 months, 1 year. That's now how to understand evolution gaming. Evolution gaming, if you take the historical numbers, you see that over 6, 7, 8 years, the company has been growing 50% per year. So it doesn't matter much if the stock is fluctuating between a P of 20 or 30. The main driver is not the V shape. The main driver is not the small pullback in the stock price. The main driver is that the business is growing wonderfully well. By the way, Scott, I think if I remember correctly, that you bought Apple recently, and I don't know what analysis you've done with Apple, or if you want to talk to us about Apple, your Apple thesis. Scott says, I'm assuming Hugo already owns shares or something new on his watch list. He wants to know, Hugo, if you had bought something else.
Yeah, I have several. Yeah.
Okay. Is your mic working, Scott, or not at all?
To be, I wanted to buy Daco, a small fraction of it, and I cannot do it, I think, right now.
Well, if you are in France, you just do less 6 hours. You reduce 6 hours and you are in US time. East
So normally
Coast.
it should be okay. Yeah. There's something strange.
East Coast, but markets are closed. If you are at 9 a.m. France time, markets are closed in the US.
It's closed today?
Oh, yes.
Okay.
Closed
Okay,
today, and in France,
and
we
so
have
it's Friday,
a
Saturday,
holiday.
Sunday.
Yes, in France, we have a bank holiday on Monday, but market will be open on Monday.
Okay. Well, so yeah, it's normal that doesn't work.
Yes. And today is a bank holiday, but Scott is working. He's just listening to this chat. So I feel like a lo-fi playlist when working. That's good. Maybe we can talk about gravity, or if you have any questions, guys, this time is for you. If you have any questions, Scott or Hugo, either about the class or other stuff or the investing stuff, I'm open to questions.
Yeah, I have many questions. I can even show you my what I've worked on. I would say this week, this past week.
Sure.
I've changed. Maybe Scott also wants to has some questions, but maybe are shorter in time, or he wants to has a question that is urgent. I don't know, because mine can wait.
No, just put your ask your long questions, Hugo, and if Scott has a question, you have the chat, and we will have an answer for you.
Okay.
I think it's the easiest way. You want to share your screen for your watch list?
Yeah. I
Okay.
think it's the simplest way. Can you see my screen?
Scott says, "Go ahead, Hugo." Okay, yeah, go ahead, Hugo. Okay.
Yeah, I don't know if you can see everything.
Yeah, we can see it.
I will open both tabs. That's why I can also show what I'm showing. No, it should work. Okay, so I've updated a bit my file.
Okay, can you maybe introduce your document for the people watching the replay and that don't understand that's the first time maybe they see your document.
Yeah, so basically it's all of my watch list. Company names are here on the left. Those are the symbols, so the price of the all of the companies. I can have them in real time. Here it's the value of the company. So this is a separate analysis that I do, and that are those documents here. And so each analysis leads to a certain value,
So
and
that's
also to
your
a
own
certain
analysis. You've done the
yes,
work, and according to your financial projections, your estimated value of these stocks is the column value 2023. So you can compare
yes,
value and price. Okay.
yes. So here it's ROIC. Right now it's a bit my quality cursor in general. So there are exceptions. There are businesses that can be great without having high margins and high growth in general. But this is the column that refers to this. So it's a return on invested capital, but in it I take the growth. I take also I take I would say, even if it only correlates to return on invested capital, it also for me is the quality of the company. So here it's my ranks of the companies. Each company that is for me in the top rank has a yellow color, and then we go down and we have other colors that are um, just expressing different qualities of businesses.
Okay, so if a
So
business has a high return on invested capital, and if the value 2023 is higher than the price, then it's a buy. That's your two criteria for stock selection. Okay.
yes, exactly. As we have discussed with Christophe last week, I would say I was a bit too bearish on my margin of safety, or on the price that I would have safety for the stocks. This is why I created the column value adjusted. I don't think that it was here last week.
No, it's
Yeah,
adjusted.
so you can see here I did put what it refers to. So I multiply the value here by 1.6 and I get a 20% margin of safety in and not a 50% as it was. So when I do my value, I normally take a 50% discount margin of safety, and by multiplying back by 1.6, I get back to 20% margin of safety.
Okay, so value 2023 is your intrinsic value that you have calculated with the 50% margin of safety, and the column value adjusted is the same thing with the 30% margin of safety. That's what have been the changes. Scott is asking if this table was updated in recent weeks. Yes, this
every day
for the change.
every day. I don't okay, maybe I can open. No, I cannot open to have the questions of Scott appear. But yes, I've updated it. No, it's 20% margin of safety, and it's only for the status A companies. So every company on yellow has a 20% margin of safety. Every company on B status has 30 or 30 I think percent of margin of safety. I need to maybe check 0.5 multiplied by 1.2. What is the result? 1.6. So it's 40% margin of safety for category B, and C starting with the C.
That's
everyone
50%.
has 50%. Yes.
Okay, so the better the quality of the business, the smaller the margin of safety. So for the A companies ranked A, you have a smaller margin of safety, and then B and C larger margin of safety. Okay, really well. What did you add? What kind of businesses did you add? I see TPL post split here.
Yeah, I don't think it's the correct valuation. I checked the file, but it didn't account for the augmentation of shares. So it splits is like 3 times more shares. So I don't think it's the correct price right now. The business. What did I add? I don't know exactly what I added, but I can tell you what has emerged from this change of margin of safety.
Okay.
So I have much more buys in general that have appeared, and we can go through the list and see which is interesting if you want.
Yep, sure. Okay, I see Evolution
So-
Gaming, Evolution AB. I see
Yeah,
V-Shop, China, Serious.
China.
Okay.
So
I don't know
right
V-Shop
now,
at all.
yeah, I won't buy any more Chinese stocks. I don't have enough data on how China uses usually recovers from bad periods or bad PE ratios. So I won't invest more in China. I only have 2 stocks in China. I don't think I will put any more stocks, any part of my portfolio, even more in China.
Yeah, and now you have found your best investment, your best opportunities in China. So if you want to invest in China, you have the choice between DACO
Yes.
and another thing. But
Yeah,
you
I
love
have,
DACO
I have
so
3 or
much
4
that
choices. Yeah,
yeah.
I have 3 or 4 choices of the best companies in China. So I know for me which is the best in China right
Yeah.
now. So
Okay.
yeah, so I only take the best, the absolute best, and I don't even put much money in it. So maybe I'm being too frightful, but I don't think the Chinese government wants outside investors to win money. So I won't put too much of my portfolio in it.
Yeah. Okay.
So outside of Chinese companies, there are other names that are really interesting. So we can go from the top of the list and look who's in here. TPL for me, so it's a really great business. We've talked about it several times.
Mhm.
And I don't think the price is correct. It doesn't account for the share
split.
split.
Okay.
Yeah, so I think I will stay with around a value of 500, and I will buy if it drops around 500. I'm not really sure about that. I have time to think about this, but right now I don't want to buy just after the split. I have the impression that they are trying to confuse with the correct price of the share or the intrinsic value of the share. And I don't understand why also in my analysis it doesn't account for the fact that there are now more shares. So that's really,
Or maybe
I don't know.
they will do the adjustment in the website like Seeking Alpha in a few days. Maybe it takes
Yeah,
they take
yeah.
1 week
It's
to
not
do it.
from Seeking Alpha, but it's from Google Finance, I think, because my spreadsheet is linked with Google Finance, but maybe didn't do the correction. So
Yeah, wait a few days, we will see.
yeah, yeah. So here, if we go down Evolution AB, I want to buy it as soon as I can. I can't right now because problems with AVKR. Serious, Buffett has recently bought some.
Yeah.
We discussed that he didn't buy a big position, so it wasn't maybe, I would say he's not sure about maybe his ideas, or he's not willing to commit more. I don't know.
Yeah, it's not a
I
big
just looked
conviction.
up. Yeah, I just looked a bit at it. It's I think the music industry, it's about rights, it's about owning the property, intellectual property of the people, and then selling the songs, or I think something to do with that. I don't have that much information.
Okay.
I wanted to look also at their possible. I think they acquired a bad company recently. I don't remember which company. I think they acquired a bad company, and which was a terrible idea, but it still doesn't impact the fact that one part of the business is really good. So
Okay.
last time I checked, it was really a great thing to look into, but yeah, I don't know. I didn't. It's not the one that I'm focusing right now.
Yeah, that
I
doesn't
still
doesn't sound sexy at all. You can continue the list. I think we have plenty of other buy opportunities.
yeah. VIP shops, so Chinese.
Mhm.
I'm not going to look into it. Dropbox, it's one I think I added today. Not there's something shady with the balance sheet, something that didn't look right. Still, they look as they are on upswing, as they're doing really great. I also checked this morning at their annual reports and all that. So this is I didn't see anything that was problematic.
Okay.
But something that worried me a bit is that I looked at their peers, what other companies that are doing the same thing, and I thought that the other companies that were in the list are also doing great. So I mean, they are. I saw other businesses that could even be better opportunities than Dropbox in the same sector.
Okay.
So
What are the names of the competitors?
I didn't analyze the competitors. I just looked at them really fast. Maybe I can even open. I can open here to see their competitors, the peers. Here it's the names of the ones that I found, I think.
Okay.
So I don't. I took some notes also. So okay, no. Dropbox is stronger than its competition. It's another company that I was.
Okay.
I mixed my analysis with another company.
Okay, so no special thing about competition.
Yeah, Dropbox
AI
stronger than
not a good sign.
competition. Yeah,
What's
yeah. I
that?
don't like normally when they talk about AI. In general, they don't know what they are talking about, or they're just saying AI to be, I would say, shiny, to be beautiful,
Yeah,
and
that's
there's nothing behind it. And so I hate people that do that in general. It's not an AI company. It's not a company that will benefit from AI. They can lie if they want, but they won't make any more real money with AI. I don't think they are in the at all in the race of AI. Any major wins in AI.
Yeah, that's not a
So
major player for sure.
yeah, I don't. I looked at their transcript and I saw they talked about AI. They would change a bit their products to have I don't know, because normally they are in the cloud business, or having your information. You can have your information on one computer and you go to a next computer. If you have a Dropbox account, you can recover all of your informations. But I didn't like the fact that they talked about AI, which has nothing to do with it, and they were trying to say, yeah, we've done, we have amazing hopes, or we have great ideas with AI. So yeah, business seems good, seems like a possible buy. I will double check before going further away.
Yeah, that's a
with
software
this.
company, so you can expect that they talk about AI. That's normal for them.
Yes,
Maybe
but
they've been using AI, but just didn't mention it. It's a software company, so obviously they use AI for their operations.
yeah,
It's
but
just that now it's sexy, so they say it
yeah,
a bit more.
everyone does that, but I don't like I don't like it in general.
Yeah.
AI is right now it's not correlated to enough improvements. There are there are just a few companies that have done valuable and cash generating things with AI, but the others are not. So I don't want to. I don't really like when they talk about AI. So yeah, so I will keep you updated on this. But yeah, I think they had like 5 great years. I think the last 5 years they were great. but there were other parts of the business that seemed strange. So if I put that the balance sheet and everything, maybe I can check why I said that earlier. So I think maybe it was in the cash flow. Oh, I don't remember exactly where I saw that, but there was something that I didn't like in the. Yeah, maybe it's this. I don't like when it's negative. I don't really understand why. Maybe it was this part.
Have you checked what they've done, like an operation they've done in 2021? Maybe it
Yeah, I
was
think
the
they
IPO.
want IPO. No, I don't think it's about that. I think they created new infrastructures or new headquarters, something like that. Big capex. So something about this headquarters or new. If I remember correctly, I think it was about that. I need to double check. I'm not sure about my informations, but
Scott?
something
Yeah, go ahead.
didn't add up. Yeah, something didn't really add up when I checked. I don't ever see normally negative equity in good businesses. So I don't have much experience with negative equity companies.
That happens sometimes. It's most of the time not a major issue. It's just the way the company is structured. You have some deals, some acquisitions, some other ownership. It's not a major issue, and you have a lot of good companies that have negative equity. Scott is asking you a question or just sharing it with you. There is a review on February 16th, earnings report. Headlines says stock drops on weak guidance. I suspect that for Dropbox. Concerns over slowing growth. He says, also, I see a rare double downgrade from analysts from Bank of America who cut their rating on the stock to underperform from buy. Yes, if Wall Street doesn't like your stock, the stock will drop, but that's only for short-term stock price.
Yeah, I don't really look at what they
Yeah,
they say on Wall Street and all that. I do my own analysis and I try to be correct with the informations that I have. So yeah, yes, I look at some other analysis of other people, but I prefer to have directly the information of the earnings call or annual reports, balance, financial statements, and all that. So maybe Bank of America were bearish on it, but
what I would suggest, Scott, is that for the Wall Street part, you have many downgrades and upgrades all day long, every day for a lot of companies. And this can happen, this can move the stock price in the short term, but over the long term, it will not change the stock price. This is not the thing that will change the stock price over the long term. This is a community of how to invest for the long term. So what I would recommend is to go and check the module 1 of this community to do your own analysis and to try and analyze earnings, see what is happening. And for example, you've talked about the February earnings report. Well, now with the module 1 that is public and soon with the module 2 that will be released in a few days, you will be able to do the analysis yourself instead of considering the estimates from Wall Street. And that's how you can have conviction and be sure about your decisions. If you do the analysis of income statement, cash flow statement, all these things, you can do the analysis. You don't need analysts to tell you what to think about a stock. That's the goal of this community also.
Yeah, and I don't think they have the same goals as me if I'm asking an analyst. So yeah, the phrase of Charlie Munger, show me the incentive and I will show you the outcome.
Uh-huh.
It's always what reminds me of I don't want to delegate too much of my work or too much of how I invest my money, because I don't want other people to be responsible if I make bad decisions.
Yeah.
So yeah, I make my own analysis, I make my own errors, and I learn from them if I can.
Yeah, that's a good mindset. It takes a lot of time, yes, but that's a good mindset.
There's some of the possible buys I haven't double checked as of right now. So yeah. Ramaco, we already talked about it.
Yes.
Occidental, I don't want to buy. Well, maybe a stupid error, but I will live with it. Chinese, and electronics. STMI, so it's the other one that I looked at today. And this one is the one which has a strong competitors. So it's semiconductors industry in general. Everyone is doing well. So they are doing well, yes, but everyone is doing well. What is so special with you? So yeah.
Or maybe
I
that's the
don't.
kind of chips that they produce. The microchip industry has been in a downfall in 2022. The stocks have been destroyed, and now 2023, it's a great rebound. 2024 continued great rebound, so everybody is doing well. But in the past, like 2 years ago, it was terrible. No earnings at all. But each chip company produces a differentiated product. So I guess the work is more a quality work for this company.
So
You're
after, if we,
Stellantis.
yeah, we can, yeah, Stellantis, it's interesting. I don't feel that it's good enough to be on my buys. Maybe I'm too difficult with it, but I don't think that a car company can do really great as growing enough
Okay.
for my strategy. Gravity is really interesting. I looked a bit at it. Same thing with competitors. In their annual report, they talked about their competitors, and they talked about several names here: Epic Games, Riot Games,
Yeah, gaming companies. Okay.
Tencent, Activision, Mojo. So I wanted to check everyone to see if they can have anything special, Gravity. But other than that, I thought the business model was really great. I don't see, I don't understand everything, but I don't see major problems that could occur that could make really drop in the amount of players.
Yeah. Okay. Scott says, agree for the analysis part, like to do your own analysis. He agrees. I have my homework cut out for me on module 1. By the way, very rich content for the module 1. Yeah, by the way, and thank you for your kind words. I have released a video of a complete analysis coming from all the things that you've learned in module 1. I have published a video on the YouTube channel where I analyze Monster Beverage with all the tools you've learned in module 1. So if you have not watched this video on YouTube, it's 1 hour and 40 minutes, something like this. It could be the next step. After the 7-hour long module 1, this is the go-to video. And I will end this 5-minute call with Gravity, I think. I looked at it a few months ago, and it's a gaming company, a mobile games company. They have a franchise called Ragnarok, selling great it's a Korean company. I don't know if they sell only in Korea or in China, but the Ragnarok franchise is beautiful with a lot of growth. They have some strong revenue growth, strong margins, strong profits. They have a lot of cash in their balance sheet and no debt. I think. They have maybe, I don't know, half of their market cap in cash, 60% of the market cap in cash. They have a huge cash pile in the balance sheet. but they don't do any buybacks because it's a Korean company, so the culture is not towards financial engineering, so they won't do any buybacks. And for years, Wall Street has been asking them, give the cash to shareholders as dividends or buybacks, and management said, no, that's not what we want. We want to reinvest into new games and just keep the cash at hand. And if you look, I mean, it's a great investment. If you had invested in Gravity a few years ago, you would have done a killing. And the stock price is correlated to the release, the good release of a new game. If they have a new franchise for a mobile game and it's top one in the, I don't know, Apple Store ranking of app downloaded, the stock price will rise and it's a 10x. And it's a bubble and then it it pops. If the beginning of a new game is horrible, stock price drops. Over the past few years, the stock price has been greatly correlated to the release of games. So if you are a gamer, you have an edge. And if you understand these games, and if you play these games, you have an edge. Because it's as if in France we have Ubisoft. We know Ubisoft games. We are much more familiar compared to Asian games. We are much more familiar with Ubisoft games. And if you watch YouTubes or our friends, gamer friends, we can tell in 1 week if a game will work or not. So we have an edge as of gamer. I know I'm a League of Legends gamer, so I know stuff about the mobile industry or these kind of games. I know in 1 week if a game will make it or not. But for Ragnarok, I have no clue at all. I don't live in China, in Korea. I have never tried their games. Maybe that's your opportunity. Go to Apple Store and play some Ragnarok games, Hugo.
No, I won't.
You're not a gamer.
No, no. The only game that I used to play was Rocket League.
Oh,
And
different kind of game.
Yeah. It's the only game that I've played really seriously, and it will be the only game that I play ever in my life.
Oh, wow.
Right now,
Okay.
I'm not playing. Right now, I'm not trying to play much right now.
Good for you.
in
Good for you. Thank you guys for coming. Scott says, thank you for another chat today. Be safe, games. Have a
Thank you.
great weekend. You too, Scott. Thank you for coming. You have great questions, so we really appreciate you coming here. Have a nice weekend. And Hugo, have a nice weekend too. We can chat with school. If you have another post, please share with it. And you will have, guys, another class that will be released this weekend. Class 2 of Module 2. It's a 1 hour long video this weekend. So enjoy, happy watching and happy investing, guys.
Great.
Okay.
Thank you.
Okay, bye-bye.
Have a nice day.